Gold just had its worst day in over 12 years, but I'm going to tell you today why that is actually a good thing. Seeing the gold price go down actually might mean that there's some resolution, and stocks and other interesting companies are actually doing very well today. So I'm going to dive into all of this, but first, let's dive into gold and why gold has seen literally the worst day in over 12 years, because we've seen literally $2.5 trillion worth of its market cap just poof disappear all at once. Now, a lot of this is because gold had a lot of FOMO investing coming in. There was people piling into gold, and the famous debasement trade that I've been covering for quite some time on this channel has been absolutely taking off. Now, outside of the debasement trade, we've had just gold investors just pulling into gold at a rapid pace. Now, it's expected, but there is that critical support line at 4,000 per ounce. So, is demand now actually wiped away, or is it everything, just kind of expected here? And of course, we've got the memers coming in saying that it's all Jim Cramer's fault, saying it's plunged over 5 and 8% as it's ignited the inverse trading. But I don't necessarily think that's the case. Now, if you sit back and you really look at the actual data, gold was overbought for quite some time. It's actually having its best year. And for those of you guys who keep coming to this channel, know that I've been covering that. So make sure you're hitting that subscribe button. But the gold value has absolutely taken off, and it's having a 3 to 4x better return this year than the S&P 500. And that's by no accident. I mean, the US dollar has had major inflationary concerns. There's been geopolitical concerns. We've seen central banks actually dumping into gold as well. But the narrative that, one or two bad days now, especially falling down as much as it has, well, that can be almost taken as a grain of salt at this point, because we have so much volatility in the market. So that inverse Kramer meme is overblown, I would say. But that USD gold suffered that worst day and crash in over 5 years. So there's been profit taking from a lot of gold players. At the very least, a drop more than 240 bucks, making it the largest one-day dollar decline on record and the worst percentage loss since June 2013. But it's still up 56% year to date. That is absolutely astronomical when you come and look at the gold numbers. So if you take a step back and really look and take a deep breath for half a second on these gold prices, you'd realize that we're actually still in a very positive place for gold. But let's take a step back and look at the overall market. Why is gold actually crashing? Well, there is some profit taking after this quote unquote unsustainable rally. Look, I think as long as they print money, they have inflation, any rally is sustainable. The US dollar, we're going to get into how the Dixie's looking here, but the dollar has had literally the worst year it's had since it's gotten off the gold standard. So literally since 1973, over 50 years. This is the worst year since then with the starting of the Dixie. So the dollar showing a little bit of life here is actually a negative for gold on the flip side of things, or at least that's what gold investors are looking at. Now, another addition here is that we are seeing that eased geopolitical tensions. So China and the US trade negotiations is something that's very interesting. And then there's also been rumors that Russia is going to meet with the United States. At least that's what Russia is planning right now. They're planning for Vladimir Putin to meet with Donald Trump here in the next few weeks. So with all of this being said, we are now looking at the potential of, this coming through here very quickly. Now, they're saying algorithmic trading. I don't really take part in believing that, but seeing that nearly $2 trillion worth of gold being wiped out, saying it's probably nothing, obviously, is tongue in cheek, but these prices dipping are the US dollar actually starting to get better, and physical gold demand just hit fever pitch. So queues outside of gold shops in multiple countries last week. Everybody's scrambling to buy this. And the interesting aspect of it is they're looking for the physical product. Everybody's been looking at gold and silver, but they're always looking at the spot prices. Now, if you look at the actual physical demand, well, China's been stacking the physical demand of the of gold in their central bank for years at a time, actually over a decade now at this point. And then we also see a lot of differences with, the physical versus the paper demand. So those ETF inflows actually have been down, and they've been down for quite some time now. As we continue going through this, everybody's favorite fake news network, CNN, is now covering the warning signs about all of this. And I cannot block these ads here, so I apologize. But this job market flashes yet another warning sign about the economy, because as people are looking at the gold markets, it's really, if you take a step back and look at the job markets, I think this is where you can see a lot of the warning signs. The housing crash that I think we're currently in, we're seeing houses not move as quickly. And then we're seeing issues with the job numbers. In fact, we saw 1 million jobs actually written down not too long ago. And so those labor market deterioration of just 22,000 jobs added in August is way lower than that expectations. Literally over 50,000 jobs. So there's been negative job growth for the first time in 4 years. And what happened 4 years ago? The cerveza sickness, everybody, the entire economy shut down. So outside of the entire economy shutting down, this is the first time in recent memory. And that the rising unemployment rate is almost being, let's call it, swept under the rug because of the gig economy now. Instead of actually being unemployed, you can drive Uber, you can do all these other things, DoorDashes of the world. And you could do those things now at the simple, push of a button and entering your information on the phone and get started shortly after. So seeing that unemployment there, it's interesting. And then if you look at the amount of stagnation here, I think this is where it's a lot of people are not talking about this, because if you take a step back and look at the comparisons between right now and the 1970s, when we saw massive amounts of stagflation, there's more connections than you may think. Now, does that mean that we're currently in stagflation? I think time will tell here. And I think that there's a lot of differences when you look at the 70s and now. But one of the main similarities is that inflation's running hot. The dollar is down. That's why they went off the gold standard in 1971. And the job losses is somewhat even, but there's no significant growth. And I think that's where we're stepping into. Now, the difference now is that everybody thinks that we can grow out of this utilizing AI. And I have my opinions on it. Let me know in the comments if you guys would want me to dive into how I think AI is going to affect the economy. But in the meantime, I think we're just going to look at the data, because it's underscoring, that consumers, businesses are struggling, and they're always going to blame the tariffs. Look, I don't think it's necessarily the tariffs. I don't hear anybody legitimately using the word tariff outside of just tongue in cheek here. But hey, now this gold crashing, it hasn't crashed under 4,000 per ounce just yet, but this record breaking rally has been absolutely insane, seeing it go up 56%. Now, if you look at how the early market open is, I know that, I'm coming to you guys from Prague, Czech Republic, so I know it's a little bit earlier and the market has just opened, but these US stock falling in early trading and gold tumbling, we're seeing, a lot of companies have hit or miss valuations. But of course, the tongue in cheek answer is, hey, everybody's looking at things like Beyond Meat and Krispy Kreme as those quote unquote safe haven investments to get out of this gold investment. Obviously, that is tongue in cheek here. But as we have that Fed meeting in literally a week, there's a 96.7% chance that we are going to cut interest rates and lower by 25 basis points now. So I'm going to be covering all of this, so make sure you guys are hitting that subscribe button for me. But if you look at the overall market at 96.7%, a chance of cutting just 25 basis points, the Fed has this priced in already, and the market has this priced in already. They have at least 3 cuts priced in. And so if you're looking at this and saying, oh, you know what? Wait, hang on a minute. This might be an actual, benefit. I honestly think it's the opposite. I think that if we don't cut interest rates, we're not going to get dramatic market moves. I think that if we do cut interest rates, if we cut by 25, you won't see much move in the market. But if we cut by 50, that's where we'll see some bullishness. Now, to get to the dollar, right? We're down a little bit right now, just 0.01% about, but we are up near 99, which, for the greater part of like last month, we were down to the 97, almost 96 range. And so we're starting to slowly creep back up towards the end of this year. And I think this is where gold investors are seeing a positive dollar. So they're saying, okay, hang on a minute. The market is telling us that this actually might be a little bit of a positive here. So let's keep this in mind as we are continuing to watch and monitor the gold prices. And then let's look at the S&P 500 because we're still sitting at 6,700, right? So we're sitting just at around all-time highs for the S&P 500, just under those all-time highs after we've seen gold crash for for 2 days now. So I think investors are still very bullish on the overall market, but they are looking at these things as potential warning signs that, we're going to start cutting interest rates and there's going to be some sort of frenzy. People are going to be getting out of gold and looking for other assets. Now, I'm not saying ditch the gold trade. Obviously, it's been a phenomenal trade to start this year. But what I am saying is that if you sit back and really look at the differences here, seeing these gold crashes like this is not something that we should take super lightly. We just need to look into the data and continue to monitor what the hell is going on because, watching history, right? Gold prices falling by that single biggest drop. It was a 4.5 sigma move. In other words, it's such a large move only happens 1 out of 240,000 days. So this great thread dives all into it. Statistically speaking, it's a 5 sigma event, which is 34 times bigger since 1971. My God, like the amount that we've seen this move is astronomical. You honestly, you literally never see it. Now, silver tends to be a little bit more volatile than gold, and silver saw an even bigger move than that. So out of all of this, $3 trillion worth of the market cap just wiped, right? So what happened before this? Silver was up by 85%. Gold was nearing those 70% returns. So silver and gold are up 67% and 55%, more than 4 times the S&P 500. So as I was stating there earlier, they were just overvalued at a certain point, and that the flows were a clear leading indicator this drop was coming because everybody was buying gold. A bunch was buying gold last week and the trade was too crowded. So everybody just dumped it. Dumped it on your face, man. All of these guys, they see the way that gold was being bought. They see investors flocking towards this. So they decided to get out of it as quickly as possible. And that sent it crashing down. So buying the paper gold, as it takes a long time, or as it takes no time at all, where was an easier call to just dump that than doing it on the actual physical gold side, where that's where we saw the lines out the door. So gold, I think, is still a strong buy, but obviously not financial advice for any of this. But it is the 5th consecutive monthly increase out of all of these metrics. So I think the central banks are going to keep buying up gold. I think all of these things are still going to keep happening. And I'm going to be covering it all for you guys. So make sure you're smoking that like Cheech and Chong and hitting that subscribe button for me. Telling a friend to tell a friend, and I'll catch you guys all at the next one.